Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you for making time today.
Happy to be here.
Well, stocks in New York were down overnight. Investors still trying to figure out the latest stimulus bill. In Korea, the Kospi and the Kosdaq were up a little bit. What's the story in the global markets and here in Korea?
Okay, well, as you mentioned, the U.S. stock market, Dow, S&P, and Nasdaq, all rose on Monday but fell on Tuesday. And much of that is now due to the earnings reports that are starting to come out in the United States. They are down from last year's second quarter, which is expected. About two-thirds of them, though, did not fall as much as the analysts expected, so that could be seen as a bit of a good news. But I think some of the bad news is catching up to the market. As you mentioned, the U.S. coronavirus budget is a factor in the stock market. The Senate Republicans started to formulate the plans a bit late into the process. They have finally come up with a plan, but some of the details are very controversial, especially dealing with the $600 weekly unemployment insurance payments for the unemployed. Virtually all Democrats want that $600 to be retained, but in the Republican camp, there's a lot of disagreement. Some want the $600 to be retained, some want it reduced to $200, or some want it back to the normal levels of unemployment, and that is causing a lot of instability in the expectations, and that may be affecting the market. Also, there's some strange items that are included in the coronavirus bill. That includes purchases of weaponry for the U.S. military, as well as the budget to move the FBI building from its current location. Some are arguing that this is President Trump's attempt to move the FBI building closer to one of his hotels. But if they do not agree on the stimulus package, the unemployment insurance will run out by the end of July, and that means people who have been getting $600 unemployment payment regularly will maybe caught up in a large reduction of the unemployment payments. European markets have been holding more or less steady so far this week. Shanghai, it rose 2% today, reportedly because the Chinese industrial output has gone up surprisingly a large amount. Hong Kong is up yesterday and today. Japan is slightly down because they've been having some bad earnings news. And Kospi and Kosdaq, as you mentioned, they've been up this week. Some market observers speculate that it's because foreigners are returning to the market. The increases in the Korean stock market have been driven mostly by foreigners for this week.
Well, amid all this uncertainty, not to mention expectations for inflation down the road, possibly, gold's been setting new record highs multiple days in a row. A lot of people expect it'll keep going up. What's your view, Professor?
Okay, in the short run, it'll probably go up. The gold closed at $1,942 per ounce on Monday U.S. time. The previous high was in August 2011 when it hit $1,892 in August. And during the intraday, the highest was $1,923.70. So obviously, it's gone beyond the previous historical highs of 2011. Now, this is not unusual. Whenever there's a time of economic instability, we've seen this during the Latin American currency crisis, the Asian currency crisis, global financial crisis. The international investors flee to cash and bonds, U.S. dollars and gold. And that part of that seems to be what's happening right now. People are turning to cash and gold. People used to turn to U.S. dollar as well, but in the last few weeks, the U.S. dollar has been weakening, I think because the United States right now is the only advanced economy where the coronavirus is getting worse and not better. So that is taking the U.S. dollar out of the usual picture, but the gold value of gold going up, people seeking more cash. That is not unusual. The investment banks are saying that gold may hit somewhere in the $2,000 and $2,100 range by autumn. Goldman Sachs is predicting $2,300 per ounce by July next year. Bank of America is targeting $3,000 by the end of next year. I wouldn't trust some of these longer-term forecasts, though, because if the coronavirus comes under control, then the situation may suddenly turn around. But in the short run, it'll certainly go beyond $2,000 because, well, as long as the coronavirus is not under control, the international global markets will be unsteady.
All right, well, we're almost out of time, Professor, but what are you looking for in this Fed Open Markets Committee meeting this week?
Okay, well, they're not going to lower the interest rates any further because they're at 0%. So the question is how the Fed sees the economy and what other types of policies will come into play. They've already said that they will continue to make emergency loan programs until the end of the year. But the one question that a lot of observers are asking is whether the Fed will try yield control curve, or the YCC, that is effectively setting interest returns at every maturity instead of just the short term. And it's been only used in wartime, but a lot of people are speculating that if the situation becomes worse, Fed will have no choice but to use YCC as a tool. The Fed has said that it is looking at the program, but it doesn't want to use it right now. I think a lot of people will see whether the Fed will seriously consider using the YCC in the near future.
Very interesting. All right, Professor, thanks so much for sharing your insights today. Appreciate it.
Thank you.